Welcome to Trading Lounge and the US indices for Monday, May 2nd. So this is the daily chart, and we had a bullish count here, and this we didn't think it was the case towards the end of all of this, but I just need to follow things through. So we had it as wave 4 here with 1 and 2 and 1 and ABC here for 2, but we've made a new low here which has breached this here, so we can negate this particular count for this for this market. So I'll be reworking this, but it's served its purpose and we don't need it now for this. So we also had a count on this count here for for a WXY scenario coming down here, but we never got the push up high enough for wave X, so we can also remove this particular count as well. So that's good news, and that leaves us with just one count. And let's go in and have a look at that, which is on this chart. So with this chart here, we've got this market moving down for a larger A, B and C wave down here with 1 and 2, and 1, 2, 3, 4, 5 for the third wave, fourth wave and fifth wave down here. So this can also be lifted up a degree of structure as well. So this can also be light blue here taking it up, and we'll probably have to do that next time around. So this, just grab this here, this will become an A wave at this particular point. So it's not a big issue. The count still stays the same and we're on track here. Now, one of the things that I wanted to talk about is that, let's go into this chart, this tick chart here. One of the things that has come up, that somebody's mentioned, and rightfully so, it's a good practical call, is that we have wave 1 here, wave 2 here. Shouldn't that be wave 3 here? And there's a good case for that too, because if we take this length, take the length of wave 1 here, or even if I extended it down to the low of wave B here, which is not the right thing to do, but just giving it full credibility, the full max there, and we can see that the distance here, we can see that this wave 3 here is longer than wave 1, right, in terms of distance. So that's all good. And the only thing that bothers me about having this as wave 1 and 2 here and 3 here, that would leave wave 4 there and then we would have wave 5, which would take us down, well, you'd have to say sort of into this space here for that. I can dress a count up so we can look at that and monitor that, and we'll be ever so careful in around this place when we contract 5 waves to this point here, and we could look at going long at that point if we got the right setup and we got a nice impulse wave and all the rest of it. So that's a credible count, and I haven't mentioned it, and somebody asked me about it, and yeah, look, I think it's good. I think it's really good, but the only problem I have with it is that when we first sort of started with all of this, and we were going up here, and I had this bearish count here. I had it as a bearish count ready to turn here, and everybody was suggesting it was being bullish, so we tracked both counts, and we worked our way through it, and we were on the right side at the right time and all the rest of it. So it didn't matter which count it was going to be. We were going to make money either way. So that's the same approach we'll take down here as 1, 2, 3, 4, 5. I think that's sort of valid. But the reason I didn't do that was because of the banks. Now, the banking sector was the one that told me that this is not a bullish run here. We're still in a bear market, and this is a bear market rally here. That's where I got it from, as I've mentioned before. So with if we have a look at the banking sector and one of the banks, so first of all, this is just an ETF here, the XLF here. So we're coming down this straight here, right? So it would be the same thing again here as well. So we could go, well, we've got wave 1 and 2. Why can't that be wave 3 here and this be wave 4? So in this instance here, if we take the top here and take this one here for this, just roughly there, and take that top and bring that top down to that top there, it does make wave 3 a bit short here. Now that's actually okay as long as this wave 5 here, if I put wave 4 here for that rally, a bit small for wave 4, but if I use that wave 4 there and then that means that wave 5, when it comes down, that's got to be shorter. It's got to be shorter than wave 3, so it's got to be up here somewhere. So probably sitting on that trend line. Can I put that over there like that? Yeah. So anyway, wave 5's got to be shorter. So we'll keep an eye on that too, right? We'll keep an eye on that. But when I take the same problem and I go to the bank here, the Bank of America, and we're looking from the top here, we're looking, it's a bit simpler, this one. We're looking for an A wave, a B wave, and a C wave down here. So in this case, we could look at wave 1 here, but then that wave 3 that we're looking at here is just too short, isn't it, compared to this wave 1 here? So I can't call, in this case, I can't call that wave 3 because it's just too short, isn't it, you know? So that's the problem that I have with it. It's not to say that, you know, it's wrong or it's right. I'm just pointing out why I'm thinking that we've got further to go down, you know, and, you know, would the SP 500 go up while the banks are still going down? Well, possibly, you know, possibly, but yeah. So anyway, that's why I'm counting the S&P like this, from the top here. So if we just go back a little bit now. So let's just go back to the daily chart, make it a bit sort of simpler. So we don't need all of those. Don't need that one. Need this one. So from the top here, coming down here, we'll bring this over here. And we'll bring this bank one over. So the bank one over here. So this is what I mean with this is what the S&P. You see how I've got this A and this B here, primary degree and primary degree here, and cycle degree here for wave 2. So I've got cycle degree here. So I'll need to put, you know, this over here as wave B over here for that. But anyway, I can do that in the don't need to bore you to death with that. So this is the sort of situation here as well. So this wave 1 here, that would be this wave 1 here. So I would need to change that to wave 1 and 2. But what I'm really pointing out here is that this has got that further to go down here, you know. So yeah, that's the reason why in this case you could call that wave 3, but in this case you can't call that wave 3. In a nutshell, I just thought it was. I just thought I'd have to mention it. I think it's a little bit important. But look, it could be the case. So we'll prepare for it either way, you know. So if we go back to our 5K chart here. I will set up another chart that will manage or look at this wave 3, 4 and going down for wave 5. Now, even when it comes down here as wave 5, or if it is wave 5 here, then it's still going to bounce off the 4,000. And even when it gets here and has the bounce, it's still going to take a while to sort it all out, you know. So because it's either going to be the wave 5 here, or it's going to be, you know, wave 3 here and then wave 4. So it's going to look exactly the same for quite a while, you know. But if it is the end of the bullish run here, then we'll be building in long positions all through group one and so on. So yeah, just to talk about that case, because that's the next issue really, where is the low, and so on. But far as the crow flies, we're looking at 1 and 2, and 1 and 2 and 3, 4, 5 for the third wave, and then we'll look for I'll just use that the fourth and then the fifth. So it's just a little bit longer coming down, that's all. So we'll either end here or we'll end further down here for this. As this occurs through here, we'll need to tune in the stocks, which I started to do today as well. I started to simplify some of the wave counts on those structures as well. So we'll just see how it goes. But that's where we are, right? So in the meantime, where you should have some short positions in here, we talked about that on Friday. So coming down to 4,100, which was pretty much the old low over here. So that's going to be, and that was the 38.2% retracement level as well. So that's going to offer some support, and obviously the 4,000 is going to offer some support. So us trading down here, we'll just keep counting and we'll take some profit off the table here, or most of it. There'll be a bounce back here, and then we'll look to get back in and go short again if need be. And yeah, so the next job is to figure out this little structure in here. Now, I can see that it can be counted in two ways. Both of them are bearish and it needs to come down further. But which is the right way, I'm not quite sure yet. I need to give it a bit of thought. But I think by the next session, it will be, it will sort itself out. It will know which is the best count to apply to this. So anyway, going into the 2000 tick chart. So yeah, on Friday we were somewhere up in here somewhere. I can't remember exactly where. We had trades over here. We covered those. We waited for the rally. Didn't get in the box up here for this, so I'm just going to remove that now. And we talked about being short in here, and on the tick chart we talked about being short all through group one here, so 10, 20 and 30 all in here. We should have more short positions in there, but we'll get to that in a moment. So counting this down here, I'm not sure which is the best way. We can either count it as 1 and 2, 1 and 2 and 1 and 2, because when wave structures are occurring, you'll either get a nice 1, 2, 3, 4 and 5, and then you'll get the ABC pattern as such, or you'll get a whole cascading scenario coming in where you get wave 1 and 2, and then 1 and 2, and then 1 and 2. You get like a series of things happening, and then it sort of goes like kind of cascades down like that. So I'm just sort of looking at both of them in this particular instance for this. I was just looking at the Asian market on the sideline here, because all the markets follow each other to a point, and I'll just bring the Asian market up because it's quite sort of interesting really. That's Friday, that's April the 29th, 30th there, 30th, yeah, so slightly different count, but yeah, so this is just Australia here. So Australia, we've got 1, 2, 3, 4, 5 here, then the ABC pattern here. So now we'll go 1 and 2 and down. So in this case, it's a nice, easy peasy, nice little ABC correction here. So the US markets, they haven't done this just yet, and they may not do this, but that's what they could do. And if that was the case, then we could copy that wave 1 here, and we could put that down here. I'll just put it there, and wave 2 over here and pull back here. So we either kind of continue to cascade down. I mean, 1 is the strongest number in the market, so the 100 there. So we either continue to have a little bit of a bounce there and do this sort of thing and keep cascading to the downside, or we have some sort of ABC pattern off off that 100, and then we keep working down at that point. So that's kind of it. So we can look at this here as, well, that wave 1 should actually go there, because that's an A wave, a B wave, and a C wave there for 1 and 2, 1 and 2, and 1 and 2, and also 1 and 2 in here as well. So that's, and then it's sort of cascading down, you know. So we're either got that, or we've got this wave 1 here, and then going back for wave 2, and I'll show you how that's counted on the 100 tick chart. How much data do we need? That's plenty. Just open this up a little bit so we can see it. So in this case, we can look at it as 1, then the A, the B, and the C wave for 2, and then 1, 2, 3, 4, 5 for 1, A, B, C for 2, and a nice sweeping move down here for a little 3rd wave, 4th wave, and 5th wave. So we've got 1 and 2, and 5 waves down for 3, 4 here, then 1 and 2 in here, 3 and 4 and 5 in here. I'm not sure about that, so that really needs to go over there, I guess. So we may see something in this space here. So I was thinking that let's just assume for a moment we get some sort of move up here, you know, whatever it may be. Let's look at the 50-60%. I doubt if it would be, if it'll go all the way back to the 61.8% up here. It'll probably just go back to the 42 over here. But if it does, you need to find a way in again. Like, the trend is definitely down, but it's sort of certainly nice to get some sort of you know, pattern in there. So let's just, we have to put the 61.8% in there, because it's always just a starting point. You know, you've got to stick the flag in the ground, so to speak. If the market trades above here, let's just say that the market goes up here, and we get, this is part of a classic trading levels pattern here, the arrival, the reaction, the first high above the level, the A wave, the B wave, the C wave coming down here, and then we can either push up there, which we don't think is the case, but that will leave this 1, 2, 3 here, A, B, C here. Anything below the C wave would be bearish at that point, so you can look to short it at that point. So yeah, find a way in on any bounce there. And if I've made a mistake, and there's I've somewhere made a mistake in here and I need to extend it further, you can certainly expect to bounce off the 100. So let's just assume for a moment that it comes down here. Then you'd need to look for the ABC pattern at that point, and that would probably bring it back to the 200 at that point. Because we're in group 1 here, 1, 2, and 3, you can expect the market to bounce around a lot well, you know, this is a bit of a pivot here in this one and this one. So that's where we are. Yeah, so our target though is down at the 4,000. It's a little way off, but we'll either look to take profit down here, or we'll look to take a percentage off the table. I just want to understand, when I see more of this structure here, I'll know where we are within the structure, and then that way I'll know what to do, because the next move down here, the 3.9 is important, but the 3.8 is more important at this point. So there we go. That's sort of it all in a nutshell. So the other thing we need to speak about is the stop. So we just need to keep it out of the way, because you don't move a stop down until, well, it depends on what you want to do really, but if you're trying to get, you know, if you're trying to get to some distance down here, then, you know, you got to get past a few things. Like this over here, it would be the support, wouldn't it, over here? But it's come through here now, so that's going to, that number's going to be the resistance. But once it is the resistance, once the market has gone up there and checked it in some way, and then moved down, then we can move our stop down in that way, in that way. So as each price point becomes the resistance and it's confirmed, then we can move it down further. So that's where we are. We're short. Our stop is up here. I'm unsure of the best way to count this at the moment. If we need to have 1 here and 2 here, if that's the case, then the market can certainly come back to the 42 here. If it come back from the 42, then it can go to the group 1 above that, 1, 2, and 3, 10, 20, and 30, group 1. So we need to keep the stop away at that point. That might not be the case, and we could just keep on cascading lower at that point. But this is our short-term target here at the 4,000. There's definitely going to be support there for that. So that's the S&P. I spent most of the time on that, so I don't need to spend a lot of time on the NASDAQ and that. First of all, we'll keep the stop out of the way up here until the 13,000 becomes the resistance. This particular pattern here has got overlapping wave structures, so it's correct. So it means we'll be taking out that low. That's all we need to know at this point. The second point is 13,000 is a major trading level. 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144. 144 is where Gann and Fibonacci numbers meet. There's not much difference between them all. When we're working with large numbers like this, then group 1 and group 2 here are the swing range for that. So we're going to see somewhere in here, once again, I can count this as 1 and 2 and 3 and 4 and 5 down here, or we can cascade it down in this case. But I think that we'll probably look for it to come down into this space and then, you know, have a sort of retest of this and then move down further at that point. Be something like that. Yeah, so if you see something over this side that gives an ABC correction, you know, we looked at that on the Australian market, like something like this here, then that's what you need to be sort of viewing over this side. And then just try to find some, you know, other ways in that's going to be sort of fairly safe. Because this is corrective here, right, and that means we will take out the bottom here. So if this market has a rally back up into here somewhere, something like this, then you can sell it up here, because eventually we'll be taking that low out, because that's a corrective pattern, a continuation pattern within the trend, within the larger trend. And the Russell will be much the same as well. So this is once again, we could somehow put this wave 3 in here and wave 4, like we mentioned with the other one. That's possible. It's a little bit sort of shy of, you know, the previous. There should be some relationship between wave A and wave C, so we should be looking at something of this nature here, coming in from the top of wave B. So we should be, yeah, should be down here somewhere, you know. So anyway, we'll keep an eye on it. You know, wave C sometimes can be 61.8% of wave A, so that's something that we need to keep an eye on. So it is possible that this wave 3 could sit in here somewhere, but yeah, I'll just stay on track from where I am. But I do thank you for that that valid question. We just need to work through it, that's all. Okay, well that's it. I'll just cruise in here a little bit further because we do have trades in here. I'm not sure. I think we might have had something on the 5,000 here. 5,000 tick. Nothing special about that. Just gives us an intraday view. So wave 1 here and 2 here. I suppose that's a little bit longer than that, isn't it? So you could put that as wave 3. And if wave 3 is a bit longer, then this wave 5 would end. That would have to be a wave 4 rally. So this market could end. So we could put wave 3 there, wave 4 there, and do we have a wave 5? Yeah, that would end just there. That could be the end of the trend. So we just need to keep an eye on it, you know, that's all. But otherwise be the same here as well. So we're looking for this down here for wave 1, back for 2, 3, 4 and 5. So it could be this 5th wave here, or it could be just the 3rd wave. That will be the thing. Eeny, meeny, miny, mo. So we'll work through it, you know. It's a good question, and yeah, I mean, we don't want to miss anything. So the more ideas in the hat, the better. So there we go. And I think we still need to move in further, maybe to the 2,000 or the 100. No, nothing on the 2. Must be Just go into the 100 tick. Okay. Yeah, so we had short trades through here, and we got out, and we got back in, and that's where we are at the moment. So in this case, I was looking at this as 1 and 2 here, then 1 and 2, 1, 2, 3, 4, 5 for the third wave. I could put the fourth there and the fifth there, and it's a bit short, but it hasn't really made a new low. It doesn't seem finished yet, whichever way. Do you know what I mean? I still think there's probably some sort of breach to the downside here, but this little wave 4 here, that could kick back. So let's just understand that. Yeah, well, I mean, that could kick back to there. That's kind of important. Once you know that, it's good. But we need that clear ABC over here, and then we can look to, you know, if we get that, we can look to add to it over here, or draw a line through here. Sometimes you can draw, the line through here is good, it just depends how low the B wave is here, you know, how shallow it is or how deep it is and so on. But that's it. Yeah, so anyway, whichever way we look at it, we're still heading down. And as I said on Friday, you know, if Friday closes weak, well then Monday's going to follow through on that. And Friday closes strong, well then, you know, the markets will follow through on that as well. So the pressure is to the downside, but we have to expect a rally here, some short covering at least for this wave 2 before seeing further downside. Alrighty, I'll leave it at that. Sorry for being late with the video as well. Yeah, okay, cheers.